Hey y'all, Katie here with Team Evoazy, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
Welcome back, everybody. It's Katie and
Matt and
Ryan. I don't know if you
hey,
want me to jump in
team.
there, Matt.
yeah,
That's all right. And we are back again for another episode of the Arizona Monthly Market Housing Update with Katie, Matt, and Ryan. Like usual, Ryan, with your best mortgage, let's dive right into rates. What's the
Yeah.
latest?
Yes, gosh, it's been a busy 30 days since our last recording. And,
Yes.
long story short, rates haven't been behaving like many experts had predicted at the beginning of the year. For example, all three of the experts that I follow, over the past decade really predicted that the Federal Reserve would start cutting their funds rate during yesterday's meeting. That was May 1st at the time of this recording. So instead, during the meeting on Wednesday, the Fed held rates steady because they quoted here decided not to cut in the face of more stubborn inflation over the past 3 months. So as we talk about a lot during our monthly updates, rates generally follow inflation. And because, shelter, food, energy, and wages, we still have a very resilient jobs market right now. Inflation really hasn't dropped as much as the Fed had hoped this year. So as a result, rates have been increasing since the beginning of April. So when many had hoped they would be going down about right now. Now, what many people feel still, really a lot of the experts, that we are still going to eventually get lower inflation, and they do feel the job market will start to show signs of weakening. And this will pressure the Fed to eventually cut rates. But some feel we might only get one rate cut this year instead of the multiple that very many people were predicting in January. But the good thing is that during the meeting they did continue to keep rates the same. They didn't increase it, they didn't cut it, they're just keeping it the same. They feel where it's at right now is a good range to drop inflation to where they want it to be. So bottom line, we will get lower rates, that the ones that we've been anticipating, that we've been talking about. It's just looking like it's going to be later in the year than we initially hoped and expected.
Yeah, that makes sense. And word on the street has changed a little bit. I mean, we still have people that are talking about rates that are really super rate focused. But Matt, you interject a little bit here too, because you have a lot of experience with this. But I'm kind of starting to see that the buyers are just absorbing it, and it's like the norm.
yes. And that is very, very interesting to see. Obviously, it is very difficult for a lot of people, especially if you lived in Arizona and you're used to, mortgages and prices being lower pre-COVID, but before we saw these astronomically low interest rates. So you were kind of conditioned on that front to know, hey, this is where my payment would be at, and that's really going to be based more off of principal balance. Then all of a sudden, boom, we have super low rates come in, and a supply demand and kind of a fear peppered on top of all that to add value to what we would call a home, but now a shelter. So people were like jumping on, and with these low rates, obviously sent all these principal balances through the roof. And with those low rates, it'd still be cheaper. So now we have this adjustment. And of course, the rates are high. The principal is high. And I think if you've been in Arizona for longer than 10 years, you're going, oh my God, this is just wrong. And it's hard to digest that.
Yeah.
Um, and, if you are in, a lower income bracket, it's going to be very difficult to justify and or rationalize spending this much money on housing. But what I think we're seeing is exactly what you said. They're getting comfortable. People are now conditioned. There's a lot of amazing things happening in Arizona. When you look at our economy as a whole, things are great. Things are really booming. There's a lot of confidence in sectors of the housing market that really, really give us confidence. Me, and anyone that's probably really looking at this is, you know, um, you know, who's buying homes right now and what is their hesitation? And,
Mhm.
we're seeing luxury really pop.
Yeah.
Um, And I'm not trying to jump into that right off the bat, but I think that's kind of one of those things that's playing into this, that anyone that is, on a fixed income that's trying to buy a home for a family, and now they're trying to digest the fact of what a mortgage interest rate payment looks like on a $500,000 starter home. Ryan, if you were to, what's that going at right now? $500,000, if you're FHA and you're a first-time home buyer putting the minimum down, you're probably looking at, what's an estimate?
That's a good question. I'm going to run that right now based off of where
Yeah.
rates are at. And I like that you said that, Matt, because that's one thing that we're really noticing right now is the confidence that people are really kind of seeing in the market
Yep.
right now.
Mhm.
Yeah.
Last year with rates as high as they were, you know, we're still seeing home prices up. I think from what I'm seeing from Case Shiller nationwide, 6%. And there was a lot of fear out there
Yeah.
where people are like, oh my God, rates are, sevens and eights right now. There's going to be a correction. Prices are going to go down. Like, no, it did not.
Yeah.
And even though we're still seeing inflated rates, not as low as we were hoping, I think a lot of people who were on the fence, who were waiting, are just like, I'm ready to sell. I'm ready to upgrade. That's what a lot
Yeah.
of our clients are right now, are move up buyers. So we're seeing a lot of
100%.
that right now. And to get back to your question, that would probably be about $3,900
Yeah.
actually for a 300,000, or sorry, $500,000 home purchase.
So, and that's what you're really like, if you're going to be, within the city, within the areas that are comfortable over the last 5 years, now you're digesting a $3,900 a month, payment. That's pretty big. And clearly that's difficult. Now, what we look at the other side of things is, what's the other choice for housing? It's going to be renting. So we look at exactly what was going on with rentals, and that's happening the same. We are staying, our inventory is not dropping. If anything, it's been trickling down in more of a trend since the beginning of the year.
You mean
Um,
it's not increasing or it's not decreasing?
it's actually trickling, it's decreasing. Like
It's decreasing. Oh, okay.
yeah,
I
there's
just wanted to
less
clear that up.
inventory. Yeah, sorry, less inventory. So, at the end of the day, that's also pointing to people becoming comfortable and paying these rental prices. And that really sets the tone for what housing all in general and what people are comfortable with.
Totally agree. And in the conversations that I've been having, and Ryan and I share a lot of clients, so he might be having these conversations too, is, I am finding buyers are wanting to get out of that rental race. They're tired of moving from house to house to house. They're tired of their rent amount being raised every year that they're in it. They're tired of not being able to paint the walls they want to paint, or really honestly build those ground roots, right, for their family and really establish a family home. They're not finding that in the rental world anymore, whereas they may have once been comfortable with that, they no longer are. And the rate conversation is a quick conversation, whereas before it was a bit longer of a conversation. Sellers seem to be totally on board with rate buy downs. They know what the word means. They know that buyers are going to be asking for that in many cases, and I'm seeing it happen. It's
Yeah.
just kind of like business as usual out there right now.
We're seeing a lot of that. I'm glad you mentioned that, Katie, because yeah, probably early last year, we are seeing on average about a third of our files had seller concessions on it. Now we're seeing over two-thirds of it.
Mhm.
Almost, 90% of the files we're getting have significant seller concessions right now. I know a lot of that has to do with inventory being up. I think year over year, from when I was reading on Housing Wire, which is one of my favorite sites to get news from, I think it's up 49% year over year in Arizona. So, a lot of sellers, they're ready to sell now. They're
Yep.
tired of waiting and they're ready to move. And so I think a lot of our buyers are just happy with seeing the amount of inventory that's out there. And they're okay with a little bit of a higher rate for now, that they're just ready to move. They're tired of being on the fence. And on top of that, like you mentioned, Katie, this seller concessions, you could use that to buy down the interest rates. And I know we've talked about it before, that there's great options. There's the 3-2-1 buy down or 2-1 buy down, where you literally could have the seller buy down your rate 3 or 2% the first year you have the mortgage, which really kind of sets things, it gets you a little more comfortable with making the payments, getting settled in the first year, hoping to refinance as rates do eventually drop, which they will, as we just talked about. So there's a lot of options out there when there's more inventory, there's motivated sellers, and you could really add on those seller concessions.
Yeah, I absolutely agree. And then for our sellers, obviously, like I said, it's kind of business as usual, like no shock and awe anymore, like we've been really used to, or all the stress we've been used to over the last couple of years, right? And conversations that I'm having with sellers now is this is not the type of market where you just throw a sign in the yard and everybody gets your clutter and your, deferred maintenance and all of that. Like this is time to walk around the house and really do the things that may have been lacking over the last couple of years. You're going to do better that way with buyers. Buyers are wanting as turnkey as possible right now because they are strapped. Yeah, they're absorbing the rates, they're absorbing the expenses, but that doesn't leave very much at the end of the day for them to be replacing carpet, paint, and doing all of those things that really should be done, before they take possession. So that's what I'm seeing out there. You guys seeing that as well?
Yeah, yeah, absolutely. And I think it's just, I think that's just natural. In these markets, buyers are going to kind of latch on to anything they can, sensationalize to make it seem like it's a bigger deal than it is. Before, when we were speaking with our sellers, we could kind of coach them and say, hey, well, what are your concerns? Let's look through and all these little miscellaneous items. We'd say, hey, don't break your back or don't even get too focused on those things because you're going to get you're going to get multiple offers, and you're probably going to fix stuff that's not even needed to be fixed.
Right.
It's different now. Those little things are things that buyers can really latch on to, and what it might cost the home seller to fix, $200, it might be translated to $500, on an
Or more.
inspection request or even more.
Yeah.
So yeah, exactly. Yeah. So it's one of those things that, yeah, being proactive now and really making sure that that property is clean, especially, and shows that pride of ownership. Because I think that's what a lot of buyers are ultimately looking for. They want to know that the home that they're buying was taken care of, it was loved, there was nothing hidden, or people weren't putting little band-aids over giant hatchet wounds. And in this market, they have every right to do so. So that's something that I would definitely, urge sellers. And it's funny because most sellers' homes are they don't have issues kind of lingering in the background. But if you can all of a sudden you're not, you don't clean it up right and there's signs of maybe, hey, you had a tough month, but any buyer that walks through is going to kind of say, well, what I see here just means the whole time they've lived here, this is what the home's been treated like and what's going on with the general maintenance. And if they got, options, which a lot do, they're going to either apply that to their offer being much lower or move on and look at something else.
Totally agree. And also, I don't know if you guys have seen any of these in the last couple of months, really, but investor offers are insulting right now. They are like
Well,
the bottom of the barrel.
and kind of rightfully so. Okay. Because right now we are in a kind of a strange spot where we're at with our rents have dipped. They probably went down probably about 4%, or I'd say about that year over year. Before we saw positive trends all the time with rents. And we have you're going to have two different types of investors. You're going to have people that are going to be the absolute short term and they're looking to flip. So they're looking
Right.
for a home that's going to have meat on the bone, enough to justify a high interest holding, doing all the work. And then, you know, before you used to be able to anticipate having 2 to 3% in your hold time of appreciation, to use towards your profit. Now it's not as certain. So people are going to have to, these investors are having to negotiate that up front, and they're going to make sure that they have that buffer and they feel good. So that's very hard to find because now you have to find a home that's going to fit that and a seller that's going to fit giving that up at that. So, and then the other side is the long term, and that's going to be the investors that are looking to buy and hold and rent. Well, these guys are going to be all about cash flow. How is their money that they're putting in now going to be returned and it's not going to cost them? Some investors, they're using arbitrage where they're ultimately saying, hey, I know that I might eat it for a few years on cash flow because my rate is higher, but I know I can anticipate doing a refi in a few years from now. And that's where I'll be able to capitalize on the long term of the investment and justify giving up that money for the few years in negative cash flow. That right there, though, is very, very tricky because now you have a fine line drawn and you have to stick to it. It's not like where you can, in more confident, inspiring markets where people are like, all right, yeah, we'll bite that off. The difference of $5,000, no. So that's what we're seeing. So investors naturally, especially the bigger guys, they have all these little boots on the grounds people that are their minions going out and sending offers. And all these guys are
Oh,
doing is
yes.
trying to be in the middle. So they don't know what the bottom line is. They don't even know what the investor wants. They just know, hey, I'm trying to get something with meat on the bone. So they're just low ball, low ball. It's all arbitrary. There's really no method behind the numbers they're offering on these properties. It's just enough to feel good and not have risk, which is probably, insulting to many sellers.
Insulting to sellers. Yeah, exactly. So my advice is it's not like it used to where you're going to get an okay price for your property if you go the investor route because you don't want to clean it, you don't want to do the things. My advice is take that time to clean it and do the things, and
Yeah,
you're going to do a heck of a lot better in this market.
100%. 100%. And you know what? And sellers, I urge you to not like take these offers from these investors personally. I know it's very difficult,
Yes.
especially when it's your home
Yep.
and you've invested tons of emotion and raised families and whatnot there. But what you need to do is you need to find the silver lining in these crappy offers. And what that is you have an offer. Now, what's
Right.
interesting in any type of anything that you're selling, people want and are more interested in buying things that other people are interested in also want to buy.
Correct.
So you use that offer and counter. Don't just say, I'm not responding to that offer. No, play the game. So
Good
then
advice.
when you have a another party that is bona fide and wants to offer, now you can tell them, I have another interested party. We have someone else that's interested. And that gives that actual little sparkle to that person that is interested, and it might help you out with where you go with that offer. But I see a lot of sellers getting emotional, throw their hands up, get mad, and say, just, I don't even want to talk to them, decline them. Well, you're kind of shooting yourself in the foot. You may as well, if they're going to waste your time, kind of with these, why not do it back and get some advantage for yourself, you know?
I totally agree with that advice. I'm always a supporter of counter, at least the first time. There is a time when I will say, you know what, this probably is too far
Yeah.
apart. It's probably not going to work out. Let's decline it. But it's
Yeah.
definitely not on the first go around because I
Yeah.
totally agree with your mindset there. I think you're absolutely right. And I have seen it.
Yeah.
In
And it's,
fact, I have a case in point. We just closed on a property last week. The person that purchased the home for 700,000 first made us a verbal offer of like 600,000. So if I just told him to go kick rocks, then I may not have closed on this house. I mean, maybe, but maybe not. I may not have closed on this house last week. We
yeah.
decided to continue to play ball. We
Yeah.
had 6 offers on the property. He ended up being the one that came up the highest, and he
Yeah.
started the lowest.
Yeah.
Wow.
So,
I think this is a
yeah.
reminder you got to have the right team in your corner. Katie and Matt, the Team Evo, right?
Well,
You
You
got to know how
do.
to negotiate these kind of things.
well, and same to you, Ryan. I think experience, and people that walk the talk is so important in our industry. And the people that walk the talk have been doing this for a long time, and they're financially secure because they're cognizant of what needs to be done to be healthy and to kind of give the same advice that you'd be looking for your clients. You don't want to get financial advice on how you're going to purchase a home when the realtor or mortgage lender doesn't even own a home. You have to stop and think
Or
that,
has
well, what's
commission
going,
breath.
yeah, and that's the other side of it. There's a lot of people, and it's sad that a lot of people and our competitors they're hurting out there. There's a lot of people that don't have business and now they're trying to survive. And when you have someone that's representing your best needs, but they're in survival mode, you got to really ask yourself, are they representing your best needs, or are theirs kind of being peppered into there? And I think that's the case, and we're seeing that a lot. And I'm hearing it on the phone with cross agents that are just very, very emotional. They're becoming a lot more triggered over whatever you call a microaggression or whatever it may be, and it's because they're stressed. The clients that they're dealing with might be the one client or two clients that they're dealing with. They're being pushed around. They're not being able to set proper boundaries and educate because they're so scared of losing the client. And that's not good. You're not really doing yourself or your clients any good with that. So that's something as any consumer that's selling or buying should be very aware of when they're choosing who to represent them. It's almost should be put into your interview questions, hey, do you own a home? Where are you at right now?
Yeah.
If you weren't to sell
Hey,
a
are you
home for
paycheck to
2 years,
paycheck?
yeah, can you
I mean,
survive?
I hate to say it like that, but you're absolutely right. Like I feel for those people who are in that situation, right? So
Yeah.
I'm not trying to be insensitive
No,
here,
absolutely not.
but that doesn't mean that the consumer needs to take the hit for it.
No, absolutely not. No, you don't want that. This is a big, big decision for anyone that's going to be purchasing and using a mortgage, broker and or a realtor. You're going to need them to guide you through these tough times. When we're in really, really good puffy markets, that's when it's easy to dismiss and say, I don't need help because it's just inevitable. It's good. It's a sunny day. But when it's
Yeah.
pouring rain and has sleet and signs of tornadoes, you need guidance, you need help, you need shelter. And that's where professionalism is going to give you that.
Because they've been there before, probably even personally.
Yeah.
Matt.
And yeah, 100%, 100%. So yeah.
Awesome, guys. I love it. Anything else to add to that before we say goodbye?
I'm going to get that on my business card. We do not live paycheck to paycheck. So
I love it.
thanks for that, Matt. That was a good idea.
I think it's important. I really do. So yeah,
Agreed.
that's all I got.
Wonderful advice. Thank you guys, as always. And we have been here for years now. So if you want to check out any of our previous episodes, I think it's really fun to look back last year and see what our predictions were and see if we were right? So
Yeah.
go ahead and test me out, guys. It is
Do
at
it.
Team Evo AZ. That is our handle on YouTube. You scroll down and it is the first playlist on our homepage there. You will see the Arizona monthly market housing update playlist. You will also see several other playlists. There is a lot of very hyper local Phoenix area real estate juicy bits there. You can get lost. You can binge it. Trust me, you won't need Netflix after you hook up with our YouTube channel. Or if you prefer the podcast style, hop on over to your favorite podcast platform, do a quick search for Arizona Real Estate Radio, and there you can connect with us and all of our juicy info. Thanks, guys. We'll see you next month.
Thank you so
everyone.
much, guys. All right. See you next month.
Bye.
Bye.